The big deal news of the day, GameStop offering to buy eBay for $56 billion. The stocks are both up big in the last month. In the pre-market, CEO Ryan Cohen saying that combined company will be a real competitor to Amazon. And joining us right now live and exclusively is the man himself, Ryan Cohen. Good morning, and thank you for joining us.
Morning.
It's great to see you. So there's so many questions about how this would all work. But before we get to any of that, just give us the backstory here and the rationale behind wanting to go ahead and try to do this.
eBay has the second largest commerce franchise, and there's a big opportunity to do something much larger and to pull costs out of the system, as well as accelerate revenue growth and leveraging our physical infrastructure, our focus on collectibles. Could be a much larger business, but bringing in an entrepreneurial mindset is what I plan on doing into eBay and building something much larger.
Okay, so you've built up a stake in this company already. You've had conversations with the company. You've tried. What's happened here?
No. We're just starting.
You're just starting. And one of the questions I had was, why not try to initiate conversations outside of the public sphere before putting this into I don't know if we're putting it in the context of hostile necessarily, but unsolicited, if you will?
For obvious reasons. eBay is a public company. There's all kinds of perverse financial incentives from the board to the management team. So there's only one way to approach something like this.
Invariably, the audience, and I know a lot of people are going to ask, how does the math for you? Given the price tag, $56 billion, given the market cap of GameStop, which is a fraction of that. I know you have this $20 billion financing letter from TD, but sort of walk us through how you could get to that price and how it would work.
It's on our website. It's half cash, half stock, but the details are on our website.
Can you help? I've read them, but can you help our audience understand them?
Yeah. Which part exactly?
Well, I think we can start with the idea that the market cap of GameStop is, call it, $11 billion. You have $9 billion on your balance sheet. Arguably, if you're providing effectively all of your stock, and then the cash that gets you to 20, you have this letter from TD. That's another 20. We're now at 40, but we're still off by, call it, 16. And the 20, as far as I understand, while it's considered a highly confident letter, meaning TD saying they're highly confident that they would provide the financing, it's not locked financing.
Yeah, we'll see what happens.
I hear you. I understand that. I'm just trying to understand where the rest of the money would come from.
It's half cash, half stock.
I hear you. I'm just saying that math doesn't get you to the price that you're offering.
So, Ryan, that's a pretty straightforward question. I don't get it. Like, where's the rest of the money coming from? Andrew laid it out pretty clearly.
I don't understand your question. We're offering half cash, half stock, and we have the ability to issue stock in order to get the deal done. But the full details of the offer are on our website.
But you're on our air. We thought we'd get...
So, but I don't understand your question.
So, Ryan, sorry, it's Melissa Liebeck at the NASDAQ. Basically, you know, you've got $20 billion presumably from TD. You've got $9 billion of cash on your balance sheet. So that's 29. Half cash, half stock. You might issue more shares. That's what you're talking about. So it could be dilutive to current GameStop shareholders. I want to move on, though, in terms of your vision for this combined company, because saying that a combined company could rival the likes of Amazon sets the bar pretty high. How do you foresee that happening, given some key differences between your model and Amazon's model? Notably, Amazon has a huge logistics hub, able to, you know, offer all this other sort of delivery service, and GameStop and eBay would be confined to the platform.
There's an opportunity to build a much larger business, to make the business much more efficient and to accelerate revenue growth. And eBay's a very strong business. You look at GameStop as an example. GameStop, very difficult business, should have been bankrupt multiple times over, and it's doing okay. It's making a few bucks. eBay is in a very, very strong position, but it could be in a much stronger position, and it could be a much larger business than what it currently is.
Ryan, you mentioned that, you know, GameStop's in a tough business. I mean, revenues are down like 40% in the last 4 years or something like that. eBay's been a public company for a couple of decades. Where's the evidence that you kind of know how to grow a mature consumer business?
I don't know. I mean, didn't you guys call for GameStop's demise multiple times? Like, it should have been bankrupt by now.
So it's not dead, therefore you know how to grow it? Is that what you're saying?
Well, look at our financial performance. Is it better than you guys anticipated? Because you guys said it was going to be doing really, really poorly, and it's actually doing okay.
Ryan, let me come at this a slightly different way. Assuming that you were able to get this half cash, half stock arrangement effectively by diluting your shares, I imagine that's how you'd have to do it, but I still don't understand fully how that would work. And you were able to capture more cash, I guess, from others. In terms of paying it down, can you walk us through the math of that? Because if you look at both of these companies in terms of just how much cash they produce, it would be a tight bill.
Did you look at the materials that we posted online?
I have looked at the materials that you've posted online, but we also have an audience that I'm hoping is going to want to understand this and hear from you, so that you can walk through this, because people do look at these numbers and they say that they're trying to wrap their head around it. I don't think that everybody automatically says, "Oh my goodness, this absolutely makes 100% sense," and he can write the check tomorrow. And if he wanted to close the deal tomorrow, in fact, I am sure that if you were the CEO of eBay and the board of eBay today, you would say, I don't know whether they have the money to be able to do this. And they're watching us now, and other investors of eBay are watching us now. And they're not going to call eBay's board and say, you need to talk to these people, unless they understand how this all is supposed to work.
Well, we have a 5% stake in eBay. It makes us one of the largest shareholders. So they have a fiduciary duty to their shareholders to evaluate this proposal. And in terms of the actual earnings power of the business, this is a business that is under earning and can make a lot more money. And GameStop is a good blueprint for that. Obviously, you know, you guys thought the business wouldn't be where it currently is, and eBay could be making a lot more money. So there's going to be some leverage on the balance sheet in order to make an acquisition possible. But it's also going to be making a lot more money in the future than it is today, because it's going to be run a lot more efficiently. And when a business is not growing users and spending $2.5 billion in sales and marketing, there's a lot of fat to cut. And the earnings power, as we laid out in our investor presentation, could be way higher, double the earnings in a pretty short period of time. And so it's a business that can take on more leverage because it's going to be making more money in the future.
My understanding is that in terms of running a proxy contest now, that would be uniquely complicated. Is this something that you would try to do in the future?
You cut out. What?
I apologize.
What did you say?
I was saying, could you imagine running a proxy contest against this board in the future? It looks like from a timeline perspective, that would probably be very hard to do now. But in terms of trying to do that on a long-term basis, maybe next year, if, for example, they don't come to the table.
Well, there's ways to do something before next year, but we're going to do whatever we need to do in order to protect our investment and pursue this. I said before, it's a long putt, but there's a lot of upside potential in something like this. You have a very strong business, and if it's in the hands of a capable operator, it can be a much larger business.
Since you put this news out yesterday afternoon, have you heard from anybody at eBay or people behind the scenes, advisors and the like?
I am sure they've hired the most expensive advisory firms and lawyers to help them navigate this. So, no, not yet. I'm sure we'll get a bunch of scripted responses and they'll load up because, of course, I mean, you're dealing with a company that is very entrenched. It's a very good company. It's maybe one of the greatest companies, but they're going to do whatever they can to, it's survival. So they'll do whatever they can to protect themselves. So no, we haven't heard anything yet.
Ryan, you alluded to it before, but there are a lot of people who sort of were betting against you, let's say, in GameStop. And I know you don't appreciate that. There are some skeptics, though, surrounding this deal who will say that, that Ryan Cohen, he wants to make sure that he hits a minimum threshold to receive his first tranche of compensation, the minimum threshold being $20 billion market cap for GameStop or $2 billion in cumulative EBITDA. Is that the case, that this is a bid to make sure that you're going to get paid in that first tranche to boost the GameStop's market cap?
I mean, I obviously want to build something much larger, but I don't benefit unless shareholders benefit. So my compensation package is aligned with shareholders, and I want to build a much larger business.
So just larger means successful. Larger means aligned with shareholder interests.
Larger means maximizing shareholder value and increasing earnings.
Yeah, Ryan, just to touch on that point, I don't know all the details of your compensation package. Maybe you can clear it up for us. If you get to a larger market cap by taking two smaller market cap companies and merging them together, or swallowing a much bigger market cap company, does that count? Because those shareholders wouldn't necessarily see the same gains that they would if you just grew market cap by, growing operating earnings. I don't know what the details of your compensation are, though, directly. Does it matter if you swallow a bigger company and that's how you get the market cap, or do the shareholders actually have to see the same gains?
I don't benefit, and I'm aligned. I'm aligned with shareholders. So, and unless our market cap increases substantially and earnings increases substantially, I don't get any salary, any cash, no golden parachutes, nothing. So it's pretty aligned with shareholders.
But the individual shareholders don't see that huge benefit if you're combining a lot more shareholders in with that and then diluting shareholders by issuing more debt on top of it. You see what I'm saying? I get it. If you grow your market cap by 10 times, sure, I think you should absolutely get gains, but not if you do it by swallowing a bigger company and just kind of absorbing all of that into it too, because individual shareholders didn't see necessarily a huge gain from that.
If I don't hit the thresholds, then I don't get anything.
Hey, Ryan, two final questions for you. One is just the 5% stake you have in the company is in the combination of stock itself, my understanding is, but also derivatives. Can you explain how that works?
it's currently mostly derivatives, and there's a little bit of stock that puts us under the regulatory thresholds, but it's currently the majority of the position is derivatives.
And was that when you first began that process in February? Were you thinking that you wanted to get a stakeholder in the company to ultimately buy it, or were you thinking that this initially potentially just could be a good investment on the back of it? Obviously, by the way, on the back of even announcing this news, the stock is up now at 9%.
It's a very good business. It's a very strong business, and it all depends on the future earnings power of the business. If I was running the business, I'd be making a lot more money.
Okay, and then here's my final question. Given the rationale for the transaction that you've laid out, which, by the way, I've heard relatively good things about, just the idea that, it's interesting to combine the idea of eBay and a GameStop, just as a concept. How would you feel if eBay called you up and said, we'd like to pursue a transaction with you, and we would like to buy GameStop at a, call it, 20% premium to your stock price? In that case, it would be, a different type of deal.
I have the same obligation to my shareholders as eBay has to theirs. And so, if something like that were to happen, then I have the same obligation to maximize value for my shareholders as eBay has.
Ryan Cohen, we want to thank you for joining us, especially as this news is just dropping over the past 24 hours, and we do hope to continue this conversation as this continues to play out. Thanks, Ryan.